Good evening, everyone. Thank you for joining HNB's fourth quarter update call. Um, Today, I have with me our DGM SME Rajiv Disanayaka and our CFO Anuradhi Dalage. Let me take you very briefly through our performance for the full year before we open up for any questions. So, looking at the numbers, mm, as you know, the interest rates, which were around about 20, uh, 27% at the beginning of the year. PLR was around 27 at the beginning of the year, came down to about a 12% by end of the year. So with that, as you can see, we saw credit demand for credit slightly picking up beginning from June onwards. So that's where we actually saw a higher decrease in the interest rate. So in line with the trend that we saw in the industry at HNB, also what we saw was that in the first half, the loan book actually contracted by about 75 billion rupees. But in the second half, we saw this being reached to a certain level with a growth of about 55 billion in the second half. So in effect, book contracted by about 1.8% during the year. Uh, the rupee appreciating also had an impact on this because we have about, I think, roughly about 20% in foreign currency denominated loans. So with that, uh, the higher interest rates actually helped the interest income, which grew by about 38% for the group during the year. So interest expenses saw like a 70% increase on one side with the deposits growing by about 12% during the year to 1.6 trillion, and the higher interest rates also that we saw, and with the deposits uh, or the FTs being more or less on a 1 year tenor, we saw this increasing. In effect, NII at a group level was 118 billion, which is about a 5%, 5.8% growth year on year. Moving on to fee income. The fee income for the group saw 4% increase. This was partly driven by the improvement in credit card volumes and digital income. The trade income was kind of impacted because in 2022, what we saw was that the entire banking industry increased the tariff rates. But in 2023, these rates came back to more or less a normal level. So with the volumes not increasing to the level that we anticipated, the trade income didn't grow much during 2023. So as a result, what we see is that the net fee income um, grew by about 4%. The next line that you see where you see a loss is because of the exchange. So on one side, the swap volumes increased. On the other side, it's the rupee appreciation in 2023 by about 12% as against the 80% depreciation that we saw in 2022. So with the on-balance sheet options getting revalued, we saw a loss of about 0.4 billion as against a 20 billion gain that we saw in 2022. Insurance premium actually saw a very strong growth of about 20%. So basically, the exchange impact resulted in a TOI dropping by about 7% during the year. Moving on to impairment. Now, in 2022, we made a total impairment provision of over 90 billion. Out of this 90 billion, about 60 billion came by way of impairment against investments in financial assets. So that was when we actually increased our impairment on ISBs to 35%. As at end of 2023, the 35% impairment increased to a 52%. So, uh, so partly we see that the 60 billion that the 60 billion charge on account of financial investments came down to about a 38 billion in 2023. So that was one of the key reasons for the drop that you see in total impairment, and also coming into a credit impairment, especially during the latter part of the year. What we saw was that uh, some of the customers who had got into a repayment plan have come out of their, or moved a bucket in a positive way. So we've seen an improvement in our stage 3 ratios also, and overall credit quality. So this also resulted in the total impairment, credit impairment for the year being relatively low. So if you look at our stage 3 ratio, it was at 3.76, and stage 3 cover was at a 57.5%. And both these ratios remain, I think, in the top positions among the industry. Moving on to operating expenses. Overall, the total operating expenses increased by about 21%. So on one side, the personal cost increased in line with the environment that we saw. Some salaries were increased. One of the main factors was the increase in insurance claims due to higher healthcare and repair costs. On the other side, some of these other expenses were driven by, let's say, higher expenses in terms of credit card volumes, higher IT expenses, and so on. So we've seen that our cost to income ratio, which was around 22% in 2022, moving to under 30% in 2023. But still, this is one of the best ratios in the industry. Taxation was impacted because we actually took the full hit of the tax increase in terms of corporate tax and SSL in 2023, because it came into effect in October 2022. So with that, the effective tax increased to about 52.5% for 2023. The lower effective tax that you see for 2022 was partly because in 2022, because of the prior tax settlements that we did, there was a reversal. So that's why you see a lower tax rate. But in effect, our total effective tax rate was a 52.5 for 2023. Looking at our liquidity ratios, you see that LCR, LAR all remain way above the requirements, the statutory requirements for LCBs, with LAR over 40% for both the DBU, and at a consolidated level, LCR over 400% against 100% requirement. In terms of capital, the requirement for HNB is to have 9.5% for tier 1 and 13.5% for total capital. So against this, we were able to record a 13.66 and a 17.13 capital levels, way above the required levels. If you look at the DuPont, you can see a major benefit came from the lower impairment during this year, as I explained earlier. So this resulted in a ROE, ROA, and ROE improving compared to last year. So finally, looking at some of the recognitions that we've got last year. So we continue to get uh, recognized in all areas at a bank level, segment level, uh, IT, HR. So these continue. So this is the brief presentation for today. Now we will open up for any questions that you will have. You may ask your question or post it on the chat box. So our exposure to MSME is around 22% now. In terms of Parate execution, what we can say is that uh, the the suspension has been announced, but at this point in time, I think there are various communications in terms of the cabinet paper, in terms of certain publications in the newspapers as well. But as we speak, we are waiting for certain guidelines to be issued by the Central Bank of Sri Lanka in terms of how we actually go about it. So that's where it stands right now.
In terms of whether we would be looking at increasing the impairment levels on the ISBs, so it would be like a industry level decision. So currently we are at 52%, which is like if you compare, we are sort of in the higher side. So it would be like after discussing with the institute and the auditors, it will be like an industry call.
So in terms of loan growth for this year, what we expect is now, I think the IMF projections for this year is around 1.5 to 2%. Inflation is expected to be around 5 to 7%. So with that, we expect loan growth to be around roughly around 10%. So with a moderate level. So in terms of impairment levels, so the trend we've seen in the last quarter is that with the economic situation improving, we've seen asset quality improving and some of the customers coming out of stage 3, and we've seen positive movements. And with situation expected to improve this year, we expect some of the other customers also to uh, you know um, move into positive buckets. And also the bank will be looking at and working very closely on getting some of these customers to uh, pay. So with that, we expect the basically the impairment to levels to improve in this year. So actually, our credit card portfolio has been faring pretty well. Last year, if you look at it, our credit card portfolio actually recorded quite a strong growth. Despite that, what we've seen is like in a normal year, under normal circumstances where economic environment is not great, we see credit card payments being impacted first. But this year, what we've seen is that the volumes have increased and the repayment levels also have been good. Uh, so actually, credit quality on cards hasn't been bad. So the next question again is on credit growth that I touched on. In terms of CASA growth, so last year and beginning of this year, what we saw was that there was a movement from CASA into FDs, with the difference between CASA and FDs being extremely high. Now that rate is actually, now the difference is coming down with the FD rates coming down significantly. So we would expect CASA growth to happen this year. Plus, there are quite a few initiatives in terms of growing CASA as well. So as you know, we have launched our payment and cash management solution as well. So that will be one area that we will be focusing on in terms of growing CASA, apart from many other areas that we look at. Group folio.
So in terms of single borrower limit, so the current limit applicable ranges from 30 to 40%, depending on the type of the borrower, on the total capital. But the proposed limit would be, there would be a reduction because it will be 25% on tier 1. So there is a reduction in the single borrower limit per se, and so we may have to work towards meeting those new limits, and there'll definitely be a transition period. So bank would be working towards complying with the regulation during the given timelines.
So in terms of areas for credit growth, so we we've been focusing on even probably last year toward during the second half as well on exports. Our export market share also has grown pretty well during the last year and last 2 years, I would say. So that would continue to be one of the key areas. We will also look at supporting some of the local manufacturing companies. Uh, on top of that, healthcare, education, agriculture would be some of the areas that we would look at. So in line with the total remittances inflows to the country, we also have seen an increase in the inflows from worker remittances through HNB as well. So tourism also in line with what you see. I think we see more transactions, more ATM, DCC transactions happening through HNB as well.
So in terms of ISB, our holding stands at $560 million. T-bills and bonds put together would be close to 700 billion, the holding.
So interest rates, as you know, have been coming down over the past few months, and PLR is around about 11.5% now. Central bank is actually driving credit growth, so that's one of the reasons why you see. Uh, uh, but while the central bank is looking at keeping the rates low, there is a possibility that the rates could start picking up probably towards the end of the year, is what I feel, from the current levels that we have right now. In terms of the currency, I think towards the end of last year, with the IMF and other multilateral funding coming, we saw improvement, and we've been seeing the currency appreciating since then as well. Uh, Probably with gradual relaxation of import restrictions, and partly some of the reserves that we need to build probably is not so high, given that we've actually increased it up to about 4.5 billion by end of the year. But with some of the repayments that are due as well, probably we might see the currency depreciating in the second half. So our net interest margins as at end of the year was around 6.5%. In a normal year, what we've seen is that our margins are around about 4%, and we believe that the margins will settle around those levels by end of the year. Leasing segment, actually, despite the restrictions on vehicle imports, we've seen uh, a lot of demand and activity happening in the uh, second-hand market. So the leasing book has actually started picking up during the second half, and we see demand there.
So on the ISB, still there are few discussions and proposals that are being forwarded by the advisors to the government, which are being looked at by various parties, and there are negotiations just starting, I believe, but we feel that it'll take few more iterations before there is some agreement. While it's a bit difficult to exactly say when it would happen, we believe it'll take at least few more months um, before agreement is reached, and we could see a finalization of the restructure. Definitely will not happen in the first half. we are hopeful that something might happen in the second half of the year.
Are there any further questions? So if there are no more questions, thank you very much for joining our fourth quarter update. We look forward to talking to you again at the end of first quarter results. Thank you very much.